Hey everyone, welcome. ProTax Accountant has put this together for us, and today we're going to demystify a part of the UK tax system that, let's be honest, often trips up self-employed people. We're talking about Class 2 national insurance. So, let's jump right in. Sound familiar? You've had a decent year, you're looking at your tax bill, and then you see it. This extra charge for national insurance. And you're thinking, what on earth is this for? Well, trust me, you are not alone. Millions of self-employed folks feel the exact same way. But the good news is, it's actually way simpler than it looks, especially with some of the recent changes. So what is this thing really? The best way to think about Class 2 national insurance isn't as some scary tax. Instead, think of it as your golden ticket. It's basically the flat rate contribution that proves you've paid into the system, and that ticket is what secures your access to some really crucial state benefits down the line. Okay, so here's the bottom line. Class 2 is a specific flat-rate contribution designed just for freelancers, sole traders, the self-employed. Its main job, its only job really, is to build up your national insurance record. And why does that matter? Because a complete, unbroken record is exactly what gets you a full state pension, maternity allowance, and other vital support when you might need it most. Now, this is where a lot of people get tripped up, so let's clear this up right now. Class 2 and Class 4 are completely different things. Think of it like this. Class 2 is your benefits ticket, that small, flat weekly amount that qualifies you for big things like the state pension. Class 4, on the other hand, is totally different. It's a percentage of your profits, and you only start paying it once you earn over a certain, much higher amount. They just do two totally different jobs. All right, let's get into the actual numbers, because your annual profit is what determines everything. For the 2025 to 2026 tax year, there are a few key checkpoints that you absolutely need to have on your radar. This table right here is basically your roadmap. So look, if your profits are below £6,845, payments are voluntary. But here is the sweet spot. If you're earning between that and about £12,500, your contributions are treated as paid. This is huge. It means you get the full credit on your NI record without paying a single penny. Then once you earn above £12,570, you still get that free credit, but you'll also start paying Class 4 NI on those higher profits. If there is just one number you remember from all of this, make it this one, £6,845. This is the small profits threshold for 2025/26. It's the line in the sand. Earning just a little bit above this figure is what triggers that automatic and, most importantly, free credit towards your state pension. It's a really big deal. Okay, so we've got the rules down. Now let's talk about the common traps, the little mistakes that can catch even the most organized freelancers out. Knowing about these can save you a world of headache later on. So what's the biggest slip-up we see? Not reporting your profits accurately. This can happen if you forget to register with HMRC in the first place, or maybe you overlook that little side hustle you started. You've got to add up all your self-employed income. If you don't, you might accidentally fall below that magic $6,845 threshold and miss out on your free credit. And on the flip side, if your profits are low, not making that voluntary payment could leave a really costly gap in your record. Let's make this real for a second. Take Sarah, a graphic designer. Her profit was £7,200. That put her safely over the threshold, so she got that NI credit for free. Awesome, right? But imagine she'd forgotten to declare a few £100s from a small job. Her profits would drop below the line, and just like that, no credit for the year. It just goes to show how a tiny oversight can have a big impact on your future pension. Okay, so how do you make sure you get this right? It's really not that complicated. Here's a simple, 4-step plan to take control and make sure your national insurance record is looking perfect. First things first, log into your personal tax account on the gov.uk website and check your national insurance record. It will literally show you if you have any gaps. Step 2, crunch your numbers properly. Add up all your self-employed income and subtract all your allowable expenses. Third, run the threshold test. See where that final profit figure lands. And finally, number 4, report everything accurately on your self-assessment tax return. That's the final step that triggers your credits. Of course, everyone's situation is a bit different. If you're juggling a few income streams, or you have questions about what expenses you can claim, or maybe you just want some peace of mind, it's always a good idea to get some expert guidance. For personalized advice, you can get in touch with the team at ProTax Accountant. You can reach them on WhatsApp or by phone at 07985 689912, or just drop them an email at info@protaxaccountant.co.uk. So the key takeaway here is pretty simple.
Your self-employed profits now directly secure your future benefits, and a lot of the time, it's completely free. So the only real question left is, are you ready to take those 4 simple steps to protect your record? For more clear, simple tax guides just like this one, make sure you subscribe to the Pro Tax Accountant channel. Thanks for joining me.